Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗶𝗱𝗲. Today is Tuesday. Yesterday was a U.S. holiday. It was Memorial Day, and I hope everyone had a great holiday. So, we are now in June 1st. It is the first trading day of the first week of June. It is a Tuesday. This week, we've got two big themes. We've got manufacturing and construction, which kind of go hand in hand. That's going to be a really big theme this week. We've got manufacturing, ISM, PMI, construction spending, a lot of basic material, construction, manufacturing. That's what's on the plate this week. But the big report, the biggest report, the one that everybody's waiting for is not the factory orders. It's the employment situation. And I'll explain. I don't want to say the same thing twice, so I'll explain that as we go through the week ahead and what's in store. The report last week, the report last month, it's a monthly report, was really weak. We were expecting a million claims, and we had 266. So it doesn't look like people are applying for jobs. As far as jobless claims, there aren't that many, but in terms of people looking for jobs, it doesn't look like there's that many either. We were supposed to be near a million, and we came in at 266,000. And we're hoping that it's a fluke, and this time the consensus is not a million. We've backed down. But as you can see here, we're all over the place, from 400,000 to 950,000, and I'm hoping that the number is at least 645,000, because if it's not, it's going to tell us that the federal government is just giving too much aid to people, and they just don't want to work. I don't know how else to interpret this number, but it looks like people are not applying for jobs. So this is a big concern, and something we're going to be dealing with this Friday, and that's what the market's looking forward to. Now, keep something in mind. The Dow's up about 237 points, the Nasdaq is up, but I want you to keep something in mind, and this is important. This is a fragmented week. Anytime you have a major holiday, anytime you have a day off, it doesn't matter if it's a Friday or a Monday or a Wednesday, the week becomes choppier, random, less liquidity moves into the market. So be very careful right now in light of the fact that the put to call ratio is at 73, which is not crazy, but historically when it gets below, into the low 70s, 0.73, 0.70, it means the market's getting too bullish. Now, again, the Dow's up 241 points. And the S&P, if you look at the chart of the S&P, it's looking very listless, very choppy. It is overbought. It is grossly overbought right now and stretched out. So I wouldn't be surprised if that rubber band, which is stretched out to the bullish side, bounced back, and if the if the bears started gaining control of the market, and all we would have to do is just drop back down to these levels. But as you can see here, the market is losing its directional flow, it ups and downs, and when it happens, that's very bad. If you look at the Russell, it is still very choppy. It hasn't really broken out of its choppiness right now. And if you look at the Nasdaq 100, it's kind of following the S&P, but again, this is the high, this is where we're at, and right now, I'm telling you right now, we're already getting almost overbought. I wouldn't be a hero right now. I would stick with real basic stocks. And as you could see here, I'm still preaching the exact same thing. Energy, financial, materials, industrial stocks. This is not a time to be a hero and start going into technology and consumer discretionary. We may see a turnaround. There's a good chance we will, but we're not there yet. The bond market is still very choppy. There's a huge negative correlation between the bond market and the Russell 2000. I think the bond market is going to break down as we get closer to the end of summer, which will cause the Russell, the small caps, to begin trending higher again, but we're not there yet. And when you consider the put to call ratio, the fact that the calls are so strong, when it's below 75, it means the call buying ratio is really strong, and when it's above 1, it means the put buying ratio is strong. And usually when people are buying too many calls, the market flips. And that's what this is telling us right now. I'm only going back 3 months. Let me go back 9 months so you can get a better idea. But as you can see here, when we get towards this lower end of the range, that means call activity is a little too strong, especially when we come off strong oversold levels. So be very, very, very cautious with that in mind. Let's talk about global economy and let's talk about what we've got on our docket this week. Now, I've already talked about a lot of this, but again, it's always good to give you guys a visual and then kind of back into things to show you why I'm looking at and what I'm looking at. So investors are looking ahead at the U.S. jobs data. That's this Friday's report that I just explained, that this number here, the 266. For reassurances that the biggest global economy is improving following the previous month's big hiring miss. Yeah, people are not looking for jobs. Traders are awaiting Friday's report on U.S. hiring in March. They're hoping for reassurances that April's downturn, lurch, was a fluke. Employers only added 266,000 jobs, half the recent average and well below the expectation of 1 million. Man, oh man. Investors have been wavered between optimism about the global economy's revival following its deepest slump since the 1930s and fear higher inflation might prompt governments and central banks to withdraw stimulus. So it's really interesting. If the economy gets too hot, they want to cool off. So it's really bullish. It's kind of bearish, and what's really bearish is a little bullish because we're looking at the government stimulus in reaction to the economy and not just at the economy as a whole. Remember what I just said right now. This is really important, and it's a little counterintuitive. If the economy gets really hot, the Fed will pull out the stimulus. So that's a bearish move. If the economy's too weak, the Fed will leave the stimulus, which is a bullish move. So if the economy cools off, it's actually extra bullish. It's really interesting right now where we're at and how the Fed actually put themselves in a corner. We've talked about this for 2 years now, so don't get me started. China, let's talk a little bit about China. China's ruling Communist Party announced Monday it'll ease birth restriction, Mazel Tov, to allow couples to have 3 children instead of 2. They don't have enough people in China. Of course, I'm just being sarcastic. The party wants to slow the rapid aging of the population and ensure the adequate number of future workers, but couples are put off by high cost and work pressures. They need 3 kids instead of 2 like they need. Don't get me started. Also Monday, Chinese commercial banks were ordered to hold more of their foreign currency as a reserve in the central bank to limit sales and restrain the rise of the exchange rate of Chinese currency. So this is the big factor on the horizon. Now, in terms of the stock market, I know. I'm singing the same song and dance, but it's been working out pretty damn well. Energy, financial, basic material, industrial. Stay with these. You won't get hurt. If we look at the S&P 500 as a cumulative index right now, let me show you where the money is. Nucor. Remember I talked about Nucor? Let's go back about a month. Let's see here. Is Nucor on here? No, Nucor was not there a month. Let's go back to today. Let's go back a week ago. Nucor, 3rd strongest stock. Let's go back another week. Nucor, 4th. So for the 2 weeks now, Nucor since May 14th, let's go back another week. I'm taking my chances here. Nucor, here it is. So May 7th, all right? Today is June 1st, 24 days ago. Nucor, Freeport, Energies, Devon, US. Remember what I was telling you? We look at this chart a lot. I'm going back in time, May 7th. Look at the stocks that were strong. And what was I telling you May 7th? Devon, US Marathon, Kohl's, Diamondback Energy, Nordstrom's, Freeport, Nucor, right? Apache, EOG, Mohawk. Remember all this? We were talking about this on May 7th. You could look it up. Let's go back to today. Nucor, Devon Energy, Marathon, Diamondback. Any difference really? A few DXCs on the horizon. I would start looking at this because you guys see what happens when stocks make it up on here. L Brands, Hess, Freeport. Here is the sweet spot. Here's what I'm looking at right now. Nucor, Freeport, EOG, Mosaic, and Apache. That's where the money is. Freeport, EOG, Mosaic, Apache, and Nucor. Let's again. You can't make this up if you tried. A month ago. Look at this. Nordstrom's, Freeport, US Marathon, Kohl's, Diamondback, L Brands, Devon Energy. April 28th. We're now in May. Well, this is as of Friday, May 20th, but this is today's data. This is June 1st data. Again, Nucor, Devon, US Marathon, Diamondback, L Brands, American Hess, Freeport, EOG, Mosaic, right here. That's where the sweet spot is. And again, they don't change very often. When momentum hits these suckers, they do well. So a couple of other ones for you. The stocks that I'm looking at today, American Homes for Rent. What did they do? Let's take a look. Equity Investment Trust. International Managed Real Estate Investment Trust. Focused on acquiring, renovation, leasing, operating single-family homes as rental properties. Do you guys know what's going on with rental properties, real estate? It's going crazy right now. This is definitely a place to be right now. I like the stock quite a bit. And I still like EWG. That's the German ETF, currency ETF, iShares ETF. I like it right now. The Germans are doing well, and I like the 𝗧𝗴𝗀. I told you about 𝗧𝗴𝗀, a few minutes ago. I really like 𝗧𝗧𝗀. It's a metals company. It's sitting near all-time highs or multi-month highs. Yeah, all-time highs. So 𝗧𝗧𝗀, AMH, EWG. And again, it's going to be a slower start of the week, but we're going to get back to volatility. A lot of news this week on manufacturing and construction, but as we get factory orders, again, manufacturing and construction is the theme of the week. So stay long the manufacturing, basic materials, industrial, retail, financial, those energy stocks. That's where you want to be. But the big report is going to be employment situation, and I believe by Friday we'll pick up the pace. Keep your eye on the bond market, and I think we're going to cool off right now and go back down. But again, as I mentioned, we're going to stay between 140 and about 132 for another maybe month and a half, and I think then we're going to start cooling off. Keep your eye on AMH, EWG, and NUE, and those basic material stocks that I've been talking about for the last God knows how many months. I know I may sound like a broken record, but we've been right on the dime and we've been consistent. And because of that, I want you to pay attention to something really important. Now, I bet that most traders don't know this, but there's a little known glitch in the markets that's causing certain stocks to skyrocket. And we've seen this glitch pay out double, triple, even quadruple digit gains in just a week's time. So now, Wall Street legend and Forbes contributor 𝗧𝗴𝗀, he's revealing the secret behind this market glitch that's made millionaires out of everyday traders in just a handful of months. In other words, traders really can't afford to miss this. Folks, you cannot afford to miss this. Adam managed money for Stanley Druckenmiller's family. Stanley Druckenmiller was George Soros' #1 trader. I mean, Adam is a beast of a trader. Folks, you cannot afford to miss this. Make sure to click on the link below to learn about Adam's strategy, the same one that he's uncovered money-making opportunities on a monthly basis. You don't want to miss this. Follow the link below. Adam is the real deal, and he's going to show you some real cool stuff. Whenever I talk to Adam, he's always showing me new videos. He's always learning. That's what I love about him. He doesn't, just because he's been doing this forever and he knows what he's doing, he's always learning. He's always expanding. He's always trying to find the next pattern or stock or uncertainty in the market. He's always trying to find an advantage for you, and that's what he has here. This is an unfair advantage. Take advantage of it now. Make sure to follow the link below to learn about Adam's strategy, the same ones that he's used to uncover money-making opportunities consistently. Folks, make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when me, Adam, Jeff, Lance post new videos. I'll talk to you guys later and have a great day. Bye!